Traders, welcome to another trading psychology session with Funding Pips. Today's session is about reflections and reflection on 2024. In order for you to cultivate and make a good plan for 2025, you need to understand your highs and lows. Your highs is what has worked over 2024. Your lows are the signals for you to interpret what hasn't worked. So we need to focus on understanding the data that you had been provided with throughout the year. And it is your job as a trader right now to review your data, to understand yourself from the technical standpoint, as well as, of course, the psychological standpoint. The psychological standpoint is something that is going to tell you a lot about 2025 and whether you are prepared to achieve what you want to prepare and what you want to achieve rather. Now, I want you to also take into consideration that you have to be very specific in what you want to achieve, and also you have to pay attention to all of the signals that you had received throughout the year. So this is precisely what we are going to focus on right now. Now, if you want to also watch the presentation for this trading psychology session, you can head to our YouTube channel and you can click live right now, and you will be able to see the slideshow that goes with this presentation. If you would like to interact and stay here, you can go to our Discord and I will be answering any of your questions. I also will be addressing questions from the comment section of YouTube and on Instagram as well. So thank you so much for your patience. I am deviating between different cameras, so please bear with me. But this is where I want us all on different platforms to engage insightfully about your goals and your achievements and the achievements that perhaps you have not yet accomplished. All right, so you have to understand yourself pretty well in order for you to move forward as a trader. So we are going to move into the power of reflection in trading, right? You need to first of all recognize the patterns. You need to analyze your triggers when it comes to psychological patterns and your behaviors. You need to plan for change and what the change will actually look like in 2025. What will you do differently this time around, and what type of behaviors and decisions you will repeat in the markets over 2025 to achieve what you want to achieve. Now, you need to have in-depth understanding in order to get there. After all, you need to execute on your change, because a talk and a plan without execution and without repetition of small changes and changes of habits and behaviors and your thought processes, and you actually taking into consideration what is happening to you as a trader, without those little changes and new implementations, you will not get very far. Because you need to execute on your plan. You need to move forward. In order to move forward, you need to start catching that momentum, okay? So reflection on this year, and this is what I want you to do. And as you are doing this session, I want you to write things down, record it, think about it, rewatch it, comment. I want you to do it all, because reflection is not about dwelling on your mistakes. Reflection is about learning from your mistakes. So all of the money that you have invested into trading, all of the time that you have invested into trading, all of the things that you have done thus far, don't please let it go to waste. Do not allow for another month, for another year to go to waste. I want you to learn from your mistakes. I want you to take it as a valuable lesson and move with that information forward. So again, the highs will teach you about what worked in terms of your strategy, in terms of your execution, what has worked in terms of your analysis, your exit points, your entries, What has worked in terms of your daily routine, in the way that you reflected at the end of the day, the way that you engage psychologically with the charts and how you interacted with the charts? What has worked? Similarly, all of the downs that you have experienced as a trader, why it did not work? Why did you experience that down? That is your major signal telling you about what does not work. And I understand, and I'll be honest with you, there are some traders that are not mature enough to understand what those down points of their trading journey mean. But this is the opportunity where you get to interact with professionals, with trading psychology coaches, with educators, with people with vast experiences in the markets to actually teach you what works and what doesn't work, and how those down points are your key turning points on your trading journey. So I really want you to reflect deeply on your behavior, on your performance, and on your psychological edge in the markets. I want you guys to focus on your trading psychological edge, for you to understand where your strengths are. Because I guarantee that most of you are brilliant traders. But again, like we mentioned during last session, during last Friday, it is not only about the strategy. The strategy is about the trader, how the trader executes the strategy. And what executes the strategy is the trader. And the trader, what? Has brain, the mindset, the psychology, perception on how you interpret things. You and your colleague trader could be executing on the same setup, looking at the same price action on Euro USD, on gold, on GBP USD, but you might be perceiving things completely differently. But it's not also about the perception in the outcome, but the interpretation of the outcome, because that interpretation is going to lead to further psychological thought processes and therefore behaviors. And that is going to determine whether you are going to be successful or not. So you need to recognize the patterns and understand what worked well, what didn't work well. What were the major triggers that you had experienced as a trader? And then you need to plan for change to adjust your strategies, habits, and mindset for 2025. So now, make a framework, and I'm going to share a proper framework in a PDF on Discord, in a psychology resources channel that we have at Funding Pips Discord, and where I am going to give you a framework for you to kind of use evidence-based framework to reflect, to understand exactly what worked, what hasn't worked, and what you can actually do with that data. Because actually last Friday, we talked about how to execute and how to understand and collect the data, trading psychology data, how to not only collect the data on your technical analysis, but also how to collect data on your emotional side and how you interpret stress and different type of emotions. And we also talked about different type of emotions, the full framework. So now, good trading days. Think about 2024. And after this session, right, what decisions led to success? What were your best trading months and why? Did you have any specific patterns that specific days of the week were actually good trading days? Because perhaps there are specific days, Mondays, Wednesdays, Fridays, when you make the most in terms of profit, in terms of discipline, in terms of how you behave in the markets. If that is the case, that data is telling you something, so please do not ignore it. Did you stick to your plan, or did luck play the role? This is a significant thing that I talked about last week. You cannot just focus on the monetary factor, whether you had a good trading day or bad trading day. When you have a good trading day, it has nothing to do with the monetary factor, because making money in the markets is one thing, but keeping money and managing money in the market, that is the skill. We all at random can make money in the markets. You can go to a random person on the middle of the street right now and tell them to press buy or sell on your trading platform. And they, by 50-50 luck, are able to make money on any pair, anything. But would they be able to keep that money, to manage that money? No, that's completely different. So if you are experiencing a profit, and let's say it's triple profit of what you usually would make, it's your best trading day, but it was by luck or because you broke your rules, that is not commendable. That does not mean you have grown as a trader. That means the luck played a role. Yes, you are going to get a little bit money out of it, but that is going to just lead you to misinterpretation, misunderstanding of what works, what doesn't work, instill you with false confidence for the following trading week. And that is going to make an impact, because then you are going to lose 10 times more. I guarantee you that, and I know that a lot of you have been through it. So how do you establish a successful trading day? I stuck to my rules. I've analyzed the markets. I've recognized what worked, what hasn't worked. That is a success. That's a successful trading day, even if you took 3 losses in a row. As long as this is part of your trading plan, you have done brilliantly. Do not ever put weight on the profits in the market as a success in the market. That is not a success, because what you should focus on is, how can I replicate the disciplined process that worked? You should never think, how can I replicate the most profitable day in the markets? What you should think about is, can I replicate the disciplined process in a market that has worked? Now, most importantly, reflect on the bad trading days. What caused the setback? The internal factors or the external factors? When we're talking about internal, we're talking about the emotions, psychology, about your personal life, about your work life. Was there anything that happened externally that affected the internal state that you had? And then internally, you made a rash decisions in the market, and then that made you behave a certain way? Or was there any external factors that actually were outside of your control? Perhaps news event that happened that you had no idea that is happening, or anything of that sort. So you always have to define and refine what works, what doesn't work. Most of all, did you let your emotions or external events dictate your actions? Majority of you get affected by the internal and external, and that determines your actions in a market. It has nothing to do with your knowledge of technical analysis. It's got everything to do how you are feeling about the markets. I'm feeling the markets, I'm not feeling the markets. It is not about that. And then most of all, you need to think about one thing that's most important. How can you minimize those bad days? So this is the reason why you need to understand the cause of those bad days, because understanding the cause of those bad days will help you to minimize those bad days. And that is what you need to focus on and think about when you are considering and reflecting on what has happened last year. Now, let's understand your behavioral and psychological patterns, right? Because there are certain things that will affect you. So we spoke last week about the 6 basic emotions, one of which is happiness. Sometimes as a trader, when you experience a winning streak, this is where you may feel extremely happy, which is absolutely phenomenal. But what you have to think about is that trading day, or that positivity that comes from it. You have to actually think, okay, does that make me overconfident? Does that make me lose my mind in the markets because I feel like I've mastered it? Because overconfidence bias, where a lot of you may think, okay, now I've cracked the markets, and I am sure that all of us traders felt like this at some point in our trading career. And if that is the case, that will lead to over leveraging after your wins and adding to your positions when you don't have to. There is a loss aversion, which causes traders to hold on to losing positions for too long, because a lot of you marry your trades. You have to be flexible when it comes to the markets. You have to flow with the markets. When the markets are moving up, where the markets are moving down, you have to see it. But when you actually get emotionally attached to your bias, this is where you will hold on to certain trades that you don't need to. And what a good tip is to actually look at the markets always when you have not entered the position. So on TradingView, when you might be actually having the buy or sell order, don't look at it. Open a fresh chart and look at it and think, okay, is this actually buy or sell? What is actually happening in the markets? And then a herd mentality, following the crowd. How many of you wish to always find out, are you buying or are you selling? What are you guys doing? Are you doing this or that? Or how do you do X, Y, and Z? And I understand this, because if majority does something and it works, then we want to replicate it. That is absolutely standard human behavior. But as a trader, eventually you need to develop your own unique style, and you need to stick to it. And this is also why you have to listen to the data that you are given, the losses, the winners, what works, what doesn't work, which time frame works for you, what days are working for you, what doesn't work for you. All of those things, all of those events, the positive and the negative, are speaking to you in the markets. And this is the reason why I don't want you to lose on that investment, because that is your investment into your education, into long-term investment into your financial capacity as a trader. But it only matters if you actually take that data into account and do something positive with it. So, evidence-based framework for your behavioral growth. We're going to apply ABC model, and I am pretty sure that we discussed that ABC model last year during our trading psychology sessions already. And this is where you need to analyze, break down, and change. So you need to analyze and understand what is wrong. So use a trading journal to document your triggers, decisions, and outcomes. Now, when I'm talking about trading journal, I am not just talking about technical data. I am also talking about collecting data on your emotional state and what you felt like at the end of the day, as an example. And I already shared an data collection framework on our Discord. It's on the Trading Psychology Resources channel. And this is what you can utilize to actually understand your psychological data. So not just the numbers, but actually it's the combination of both that helps you develop and move forward. Then of course you need to break down that data, deconstruct the mistakes. What was the root cause? Don't ever look at the things at the face value. Don't ever look at things and think, okay, today I was angry and tomorrow I will be angry. And 5 weeks ago I was also angry and that made me lose a lot of money in the markets. You're not actually truly understanding what led to that anger. Why do you get so frustrated in the markets? Why do you get so emotional in the markets? Why do these things occur? There is a root cause and reason. And for you to change that, you need to understand that root cause, because there is something in your subconscious mind that will be affecting your behaviors, your interpretations, and how you understand things. And if you don't fully understand yourself, how do you expect to change anything about yourself? That is the key thing. So it is your job to always understand your trading day's outcome based on basics at the start. Was it emotional or technical? Simple as that. Internal or external? The answers that you are looking for are right within you. You don't need the majority to tell you what was right or what was wrong. You already know what was right and what was wrong. But you need to seek those answers from within. And obviously change. Implement actionable changes. Adjust your strategy. Improve your emotional control or tweak your routines. Because that's what it is about. It's actually about the experimental process. So far, if you are still not a profitable trader, you are undergoing a discovery as a trader. You are undergoing that time where you are discovering what works and what doesn't work for you. It's the trial and error phase, but you need to pay attention to that trial and error phase and what works and what doesn't work. I myself, on 1 minute time frame, can be the best trader in the world, and I can be the worst trader in the world, because whatever I make, and as fast as I make it on 1 minute time frame, I lose it just as fast. I know that my most sustainable time frame is 15 minutes time frame, but I've learned that through a big journey and through understanding what works and what doesn't work. And majority of traders around me actually trade on 1 minute time frame, and they are extremely successful. But I cannot follow the majority. I need to follow what my data tells me, because the character that I have as a person and the person that I am and the personality traits that I hold actually do not allow me to trade on 1 minute time frame in an effective and sustainable manner. And this is your job to understand what is sustainable for you as a trader. And those of you who have joined just now, I am doing a session. You can watch the actual slideshow on YouTube. We are live now, and on Twitter/X as well. Here we also have the voice. I will be going through your questions at the end on Instagram, on Twitter, on every single platform that we are streaming on. Okay, so I am looking at all of the cameras, but I will be addressing your questions at the end after this mini webinar on your reflecting, because I really am hoping to plant seeds in your brain about how you can be better, but actually not just talk about being better, but to give you tools to become better, to help you reflect and truly understand yourselves as well. So it's about building discipline, right? And in order to build that discipline and make changes in terms of your behaviors, you need to be aware of all of the things, and that's all it is about. So how do you become aware? You need to daily reflect. So you need to really journal your traits and your emotional states at the end of each day. I know that some of you already do it, and I know some of you are avoiding to do it, because I know that you're not comfortable with some of the decisions that you made throughout your trading day, and at the end of the day, you do not want to face yourself. You want to kind of turn a blind eye to it and say, do you know what? It was just one of those days, but then, you know what? 3 months go by and you still are trapped within the same behaviors. And this is where you really need to, at the end of each day, develop that routine to understand yourself as a trader, as a person. What personality type are you? What kind of things are triggering you based on your experience? Do you understand that our interpretation of the markets and how we see money has huge root within us? Where we from, our culture, how we interpret money, what does money mean to us? What does money mean in our cultures? How have we been taught about money? Are we good with money management? All of those things will have a huge impact on the way that you behave in the markets. So you need to really dig in deeper. You need to do weekly reviews as well, okay, and understand the patterns. And you need to understand also your weekly data, that perhaps based on your strategy, not every single day is a winning day. Not even every single day is a trading day. And adjust your plan. Perhaps I wouldn't say adjust your plan weekly, but adjust your plan on a monthly basis, but also pay attention to that data, because I guarantee you, if you actually start collecting data, technical data and emotional data, you will notice patterns. It will be literally right in front of you, and you are able to do it. All of the power to actually have the answers that you want and to be better as a trader are right there. You can actually achieve it. Okay, and once you track all of those metrics, performance metrics, the losses, the winners, the patterns, what is your data, what is your winning rate, what is your largest winning streak? What is your largest losing streak? What is your best entry time frame? What is your best exit point? What is your most profitable risk to reward ratio? All of those things matter when it comes to performance metrics, and also everything around your psychology and your emotions, and also about your routines. What led to that day? How did you start the day? How did you end the day? What were the key points out of that day? Now, planning for 2025. So you need to really set yourself process-oriented goals, because you cannot want something without knowing the detail. Because, I see a lot of content creators on any platforms kind of talking, trading is like your business, but they never actually tell you more detail. What does that mean? It's like a business. Well, when it comes to any business, you need to have a business plan, right? And you need to kind of have a path of execution of that business plan, and you need to understand what are predictable patterns for certain months in a year or certain quarters of the year, and what may actually happen. And also you need to have a journey, because when you have that journey spelled out in front of you, then it will be easier for you to follow the steps. Because if we try to go from 0 to 100, we get lost. So I always use the analogy of trying to drive from one city to another city. So let's say from London to Liverpool, you are driving by car. If you just focus on the end location, you will never get there. But what do you do when you actually drive from London to Liverpool, which is about 5-hour drive? You are only focusing on 5 meters ahead of your car. And you are focusing what's right in front of you to keep yourself stable, to make sure that your behavior, so your alertness and your awareness is there. And as you focus on those little paths 5 meters ahead of you, and then ahead of you, and then ahead of you, that will actually get you to the final destination. And that's exactly what you need to do as a trader when it comes to your trading plans for 2025. You may want to have a big plan that you want to be funded with so many different accounts, but then do that step-by-step process. Understand what you want to achieve in terms of the big goal, and then work backwards. So make sure that you utilize the SMART goals framework. And actually, if you want to have more details on the SMART goal framework, you can go back to our webinars from 2023 when we are talking about it, because we break it down in very much detail. But your goals need to be specific, measurable, so SMART, achievable, relevant, and time bound. So you need to be very realistic with how you set your goals. And if, for example, you want to be funded with 100K account, start with 25K, start with 50K, or kind of also give yourself realistic time frame. If you want to go straight for the 100K of 2 months based on your strategy, because if you are going to give yourself 2 weeks and your strategy may have 2 weeks that are losing weeks, then obviously none of that actually makes sense. So if you have that in front of you, that is going to help you build your psychological resilience and consistency over chasing the markets of unrealistic results. So now we are going to go into open discussion and Q&A, and this is where I'm going to go between Instagram Live, I'm going to go between YouTube and Twitter as well. So I'm going to answer as many questions as possible. I will first focus on answering questions on YouTube, and then on Twitter, and then lastly also on live on Instagram. But before we go into that, I really want you to focus on self-reflection. And after this session, if you join our Funding Pips Discord and go into psychology resources, I will post a full framework on what you should engage in. But now I want to scroll through our comment section, and I want to address any of your questions. So please feel free to ask us any questions. If you want to ask questions on Instagram, you are welcome to. I will get to it. If you want to ask questions on Twitter and on YouTube, please also, you are free to do so. So at the moment, great to be here, great to be here. Okay, so now I have a first question. I'm going to read it out loud. My strategy worked till November. I got 2 payouts and passed the challenge. But in November, I lost it all. It was sideways market, but I made a mistake too. So actually, what we are seeing here, that you have a well-working strategy and you got paid consistently until you got to a certain stage in the markets, and that is towards end of the year. And certain strategies within certain markets will not work because the markets actually do tend to go and move sideways. Now, when it comes, for example, to a pair that I trade, which is Euro USD, for the first 2 weeks in December, it actually moved pretty smoothly and pretty nicely. But I've noticed specifically last week that the market started moving sideways, and to me that is a signal to actually not trade. So what can I say to you, Vaibhav, is that you have a strategy that works. You just engage in the markets that are not profitable. You engage in the markets when you got trapped, and perhaps greed or some other factors, emotions played a role in the way that you made your decisions. But you have what it takes. You know what to do to get what you want to get out of the markets, so you can repeat it. Once you had funded accounts before or master accounts, you can get that again. So clear your mind, focus on what worked and what hasn't worked. Remember, there is a lesson in everything. Make a plan for January, February, and March, first quarter of the year, and you've got this. You had it before, you're going to get it again. Do not rush the process of getting those accounts back. No, if it's going to take a month, it will take a month. If it takes 2 months, it takes 2 months. But what you know for sure is that you actually have a well-functioning and profitable strategy as long as you stick emotionally and psychologically to your technical analysis. And once you see the first signs of markets moving sideways, step away and review that data of your past data. You know, when you had your first signals that the market is actually not moving anywhere, maybe third loss, fourth loss, that's when you need to take a step back, even if you are in drawdown, and kind of take a break from it. Okay. All right. Let's see. Next question. Bring me question, guys, so we can talk about your trading psychology. I know a lot of you want to speak about your technical analysis, but I don't want to focus on technical analysis because genuinely I know that most of you are brilliant traders. I want to focus on your mindset. I want to focus on organizing your thought processes, on your emotions, because that's what you need help with. You all actually know how to trade. You all pick up trading pretty easily. But the most important thing is to work on the trader behind any trading strategy. So please focus on psychology. Okay, next. Waiting for January competition. Amazing. I love funding pips. We love you too. Is this live or going to stay on YouTube? This is live and it's going to stay on YouTube as well, so you can rewatch it after. Now, we have another trader saying, journaling helped me improve my trading because I'm able to avoid similar mistakes. Wonderful. Because what actually journaling does, it helps you to recognize behavioral patterns. And also on a deeper level, if you understand why those behavioral patterns happened and what led to it, what kind of emotions, decisions, routines, analysis, then you exactly know what to do and what not to do. Because very often in a market, it's not just about knowing what to do, but very often it's actually about knowing what not to do. And that is going to really save you a lot of money. Now, let's see more questions. I don't know why when I have account working on it, I don't get disciplined on it. And when I don't have one, I am disciplined. So I am assuming that it's about the mastered account. So this is when you are working on it, you are not disciplined. But when you don't have it, and you know what? This is overconfidence, because when you have one, you no longer strive for something, right? So this is where your overconfidence takes over, and then you think you can speed up the process as well. So you're actually not sticking to your trading strategy and to your data. Once you get the opportunity to get a short at the account, you want to make it happen. So you kind of want to count on your luck, and you think, okay, once I get it, I'm going to become disciplined. But unfortunately, it doesn't work like that. Okay. Now, let's see. The frequency of these live streams are every single Friday. So we are going to do these sessions every single Friday. So at the moment, we do it at 4 p.m. Dubai time. The Times may vary, but we are going to notify you, and there are a lot more sessions coming. So please stay put, and we are going to tell you what is going to happen. Now, I have another one. I don't understand why I struggle with discipline when I have an active account, why I remain disciplined when I don't have one. So I think that is a similar question that we already discussed previously. Let's say, what is the next one? Do I still have to do my technical data manually when I have the metrics on my funding pips dashboard that gave me trading volume, profitable pairs, win rate, etc.? Actually, this is an amazing question. So no, when you already have the metrics, that is amazing. But you need to understand the meaning behind those metrics. The winners, the losers, the best trading days, the worst trading days. What were the setups that worked the best? What didn't? What decisions led to the winning trades and losing trades? So actually have those metrics in front of you, but then understand those metrics. What do they actually mean? What does your win rate mean? Your win rate of 60%, what does it mean? What is your most profitable trade? What is your winning pattern? How many profitable trades are you able to take in a row? What is your losing pattern? Best trading days, worst trading days, best trading hours, worst trading hours. How you feel on certain days, what leads to certain decisions and certain outcomes. That will help you to determine more what is actually happening. So you can pair the funding pips dashboard with the framework of the emotions data that we have on our Discord in Trading Psychology Resources channel. And then you can pair it up to really understand the details. Now let's see more questions. I can see some repetition in some questions, so I'm going to kind of move past those. How to detach? Oh, brilliant. Maruka Gomo. How to detach after trading and continue with other aspects of my life without checking my phone or laptop frequently. This is where discipline comes into place, okay? And this is where I always tell traders to build in discipline on the charts, outside of the charts. So actually, number one step of building discipline within trading and on the charts is to actually start building discipline in different aspects of your life. As you will start building discipline in different aspects of your life, you are going to change on the charts. So very often the checking of the phone is actually not just the trader thing. I know traders, we do it a lot, but actually the factor that influences it is the habit that lives in your subconscious mind. And this is, I give you a simple example. Let's say there is an app that you are using the most. Let's say TradingView, okay? What I want you to do, or WhatsApp, or Instagram. Let's use Instagram, because people actually mindlessly also scroll through Instagram and they're not actually looking for anything there. And it's all to do with habits that are kind of, you know, there in your subconscious mind. So your Instagram icon on your smartphone, move it somewhere else, move it to another page. And I guarantee you for the next few days, you will be automatically going where that Instagram icon used to be. And you're going to be clicking that different app. And that will just show you everything is to do with habits. So when you are trading or when you enter a trade, you need to set yourself rules and you need to make it difficult for yourself to check your charts. I would suggest set yourself alarms to check your charts every 15 minutes or every hour. I don't know what kind of strategy that you are using, but perhaps if you're a day trader and your trade on average may take 5 hours, then do not check more frequently than every hour. And actually wait for that alarm to go off. Once that alarm goes off, then check it. What you can also do is set yourself passcodes on the trading app. So then actually when you want to check it, you would have to consciously then do the passcode or Face ID, etc. And that is an extra step from stopping you to actually check it, okay? You need to set yourself those boundaries and reminders, because if you think about it, when you are in a workplace, any workplace, or at university or at school, there are already rules and procedures that are implemented by either your boss, by the teacher, or by the university itself, and you just follow those rules. When it comes to trading, you have nobody above you to be your accountability partner and to ask you to follow those rules. You are your own boss, and that's what you wanted. You wanted to be your own boss. But even though you want to be your own boss, you have to set the rules. You can't just wing it. It doesn't work like that. You need to set yourself clear rules of what to do or what not to do. You literally have to write for yourself policies and procedures of how to be a successful trader. So this is why your successful moments and unsuccessful moments will provide you with that data of what works and what doesn't work, and you need to write rules and stick to your rules. Why do you stick to the rules that a stranger puts in front of you and tells you this is what you have to follow in a workplace, and you do? But when you ask yourself to follow the rules, you don't listen to yourself and you don't respect yourself enough. So that respect comes from within. You have to respect yourself enough to listen to the rules that you are applying, because there is a reason behind those rules. And this is when you write in a rule, write a reason behind it, as many reasons as possible. So you actually ingrain in your brain that there is a deep data-backed reason why certain things matter and why you have to engage in it to be a successful trader. Okay, I'm going to now scroll through and look for more questions. Instagram, I'm going to get to you. At the moment, I'm addressing questions from Twitter and from X. So let me just see. Emmanuel, I always have good weeks where I stick to my strategy and plan and emotionally regulate. But after a weekend, I start a new week without discipline and compound on my losses. That ends with losses. Okay, so what you know is that what you are doing already works. Your strategy and actually your emotional regulation, which is absolutely fantastic. So what I would suggest after the weekend, go with smaller risk into the market, because clearly this is data speaking to you. Start of the week for you is slow. And it doesn't have to be actually data related in terms of markets, that the markets are good or bad. Sometimes us as people, we need time to catch a momentum to actually start getting into the flow of things. So when at the start of the week, clearly your performance is not the best, lower your risk. As much as you can, treat it as your training days. Do not ever think, oh, okay, so now, I could have got this, I could have got that. No, that doesn't matter, because over long term, it is going to pay out. Okay, now we have, sometimes I use profit management instead of risk management. For example, when I open position, I calculate profit instead of risk management, and I ignore my 1% risk management. Again, you know what you're doing right or wrong. What leads you to that? Why do you do it? That is the most important question. Why do you do it? That's it. The root cause. Why do you do it? Hello. Okay, now I am going to go and move to Instagram. So I can see here that we have questions. So guys, any questions on Instagram, please make them psychology related, okay? Psychology related questions, because again, when it comes to technicals, you all have amazing technicals already, but when it comes to trading psychology, all of you want to and need to focus on it a little bit more, and that is going to help you. I have another question. Do you still use 1 to 2 risk reward? No, I use actually various. So whatever market offers me, I'm going to take. So it depends on the levels that I'm engaging in the markets. But I have a question here on Instagram. Unable to trust the strategy, even if it worked in the past, but doesn't work since months. Okay, so obviously you need to review a strategy and what worked before and why it worked before. Was it the matter of your execution, or was it the matter of your trust within the strategy? You need to really thoroughly go through the months of the data when the strategy worked and review that. And then now you have to compare why it stopped working. I do think that the reason why a strategy stopped working has nothing to do with the technical side, but everything to do with you executing your strategy and how you are executing it now. Perhaps before you were more patient and you are not as patient right now. Okay, so let me look at more questions. I just have a lot of highs and a lot of positive comments. Thank you so much. But if there are more questions on X or Instagram, then please do let me know. I mean, on YouTube and on Twitter. How to hold a winning trade completely. Detach from it, don't watch it. Don't micromanage it. That's the most important thing. If you think about it and you actually think about all of your trading data, if you would not get involved in majority of your trades, I mean, watch it, micromanage it, close it early, you would be a way more profitable trader. So everything that you are doing is psychological. So closing your trades early and interfering in the process of you actually engaging in your strategy, everything to do with psychology. Again, root cause, why? What are you afraid of? Why are you afraid of holding that winning trade? Okay, so guys, thank you so much for engaging in the session. I've answered majority of the questions. I am going to post in our Discord Psychology Resources channel today, at the end of the day, in a couple of hours, a framework. Okay, and I want you to kind of utilize it. So please, 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 please take time to actually reflect. The next session is going to be on next Friday, and we are going to again live stream it on all of the platforms, and we are going to dive into different trading psychology related topic, and also you'll have an opportunity to ask me questions at the end. However, before I go, I can see a few more questions have rolled in. Sorry, Madame Haida, I am a top trader here from the Philippines, and I can confirm you have given great practical tips. Well, thank you so much for your feedback, and I'm really glad that we could help. I can also appreciate the response. Sometimes when I don't have setups, I feel guilty for not performing working. Sometimes I take trades just to satisfy the need to do something. Waiting is dreadful. Do you know what? This is such a meaningful comment, because this is how we are conditioned as a society. So from very little, we have to go to school and we have to be there from Monday to Friday, and we need to be active. And that's how we are trained. Our brains are trained in a way that productivity, winning, and being a good employee, being a good student, is to attend Monday to Friday within certain hours and always work and always do this and always do that. And that's what we associate productivity with. But actually, as a trader, is the opposite. And this is precisely the reason why majority of people struggle with being a trader, especially at the start. This is where you also, outside of trading, need to find yourself hobbies. When you are waiting for your setups, read, learn, do something that you are enjoying in between, because there will be days that you will not be trading, and that is going to help you to maintain your money and to manage your money, and not to just enter a setup for the sake of entering the setup. And those days are the most important days. You think about it, that we have been brainwashed by our society in a certain way to function a certain way. And this is the reason why we do what we do. And this is the reason why you rush into certain setups. So you need to literally rewire your brain and retrain yourself of what success actually means in trading. So you need to take time to do it. And what you need to do is actually engage in reading, in learning, in watching our sessions, in actually taking part in the frameworks that we are providing you with and the tools, so you can actually use it and utilize your fullest potential. Because trading actually has meant to give you more money and more time than money sometimes. And how you utilize that time to grow and to fully utilize what you had been given, what you had been missing. Because why majority go into trading? To win their time back. But when you're actually winning your time back, you're freaking out, which is a paradox, but it's understandable, because that's how human psychology works. That's how we have been trained as a society. But now you have that awareness, you need to really work on rewiring your brain. Okay? And genuinely attend those sessions, follow the framework, follow the steps, take book recommendations, and that is going to extremely help you. Now I have another question from Alex. Risk management is easy when you think about it. Just set the hard limit of how much you want to lose for the day and just enter your trades. Don't worry about your wins that you will hit. Well, easier said than done, but absolutely, that's all it takes. And in order to achieve that, you need to really work on your discipline as a trader, as a person, not as a trader, as a person. So this is where you need to actually build that discipline into your life about different areas of your life. Okay, now let's see what's next. We get a lot of different comments, which are absolutely lovely. Thank you so much. Okay, now I actually have something here. It would be nice to work on some disruptive patterns that work once emotions are high and risking to escalate mistakes next week. It would be nice to work on some disruptive patterns that work once emotions are high. So I think what you mean is on management of emotions, especially during those peak moments when you get tunnel visioned. That's a pretty good topic. We're going to think about it. But anyway, guys, it's been an absolute pleasure to be here. I hope you all had Christmas, if you celebrated, or at least a lovely time with your family. We are wishing you the most beautiful new year, and really take time to reflect on this year. As a trader, as a person, think about your growth. Do not think for a second that only because you did not achieve what you wanted at the start of the year that you are a failure or anything less. No, those are the lessons and journeys that you need to go through, but do not allow for those lessons to go to waste. So utilize that data very, very wisely. So without further ado, thank you so much for being here. It's a pleasure to speak with all of you. We will see you next Friday for the next Trading Psychology Ask Me Anything session. And have the most beautiful new year. Happy New Year, traders, and take care of yourselves. It's been a pleasure. Bye-bye.